Well, good afternoon, everyone. Welcome everyone to the investment committee. Wendy, thank you for joining us on Zoom. Present is Jamie Blaine, Phil Lichtenstein, Derlin Lunt, and May Weiler. It looks like Mike Bailey will be finished with his dissertation and hopes to join us at our next meeting. And so what I've often done, Wendy, of all my committee members, if they have, instead of asking them to leave, if they have ask for a leave of absence, if we really feel that's really important, instead of finding someone and asking them to come back, because usually they'll never come back, we give them the emitter status. And I don't want to defend a PhD. I don't think I'd be very good at it, even though I do know how to argue. So should we we'll get a little screen and we'll get a motion to do the minutes.
Yep.
So move.
Here are the minutes if everyone didn't get a chance to review them prior.
I just glanced at them quickly. It was just it was just the four of us here last year, at last meeting, and we had. And we had our person from the bank.
Yeah.
And will he be joining us today?
No, we didn't ask him.
Right, that was a clear thing that we had.
Correct.
And I don't think he should come every quarter. I think it's really important that we've talked about, and this was tax season anyhow. It's really important that we get him here after the fiscal again, because this is like our lead up meeting. And
Right.
we did really well, not to only lose that little bit in that quarter compared to everyone else in the world.
Okay, so are we still reviewing the minutes?
Yeah, so yeah, let's go back. Any corrections, Jamie or Derlin or May?
I don't have any.
So I moved to post the minutes to the next POS meeting in 2 weeks.
Sounds good.
We're not gonna make Tuesday's meeting
Okay.
because the packages went out already today.
Okay, so now we can
Can you
review.
pull it up from the left? Because I can't read nothing. Or I'm gonna go walk out and get my glasses and come right back because I'm gonna be fighting this.
Like that.
Oh, that was really good. Can you do that again? All right, so we'll go on to, no, I got it now. I got it
Okay,
now.
so let's go.
So we're gonna review the First National Wealth Management's performance material, which was the end of the first quarter. Wendy, were you able to get a copy of it or see it?
Yes, I have a copy in front of me.
Excellent.
Okay, so. So this is the overall performance summary, but if you look at the actual quarterly statement on page 2 with the activity summary, this is our actual realized activity. The 13,294 million would include either unrealized activity. So down here in the ending market value for activity summary, that's our actual activity. So this ending balance of 13,257,416, that is the actual ending market value. And as you can see, we did decrease slightly.
But very slight. It was a very turbulent time and, worldwide for markets. We definitely fared well, and these guys are pros, and I think we've done really well by them. And also some of their choices and investments are really designed to weather these type of storms over the long term. We are a municipality and we can't bet the farm.
What is the blended benchmark that they use? Do you know? Doesn't say.
We have, okay, so the blended was minus 0.04.
But I mean, what goes in? Is that something, where do they get that benchmark? It's because it's,
I believe that's, the. It's an excellent question. I think it's. Just. Standard market. Performance. I think that they have. Some indicators that are able to tell them what the
right,
rates are for, I guess, all the other institutions. And I guess compared to the treasury. But that's a good question. I'll ask him.
yeah, I'd
I
like
don't know
to,
off the top of my head.
And it's
Yeah,
it's
no.
a great, the next
like-
time we have him on the call, Jamie, let's ask him that, cause he will give us a really good explanation. No, he's good and.
yeah, I just wonder about the benchmark.
Yeah, I'll ask him how exactly he comes up with those
Yeah.
benchmarks. That's a great question. That's kind of what I was assuming, but again, I don't know the
Mhm.
complete answer.
All right, so now we're on to the. there's our pie charts here.
So our fiscal year is January 1,
6:30 to, it was July 1 to 6:30.
July 1.
Yeah.
All
Okay,
right, so
So-
this
So this is
next
three
quarter, this
quarters.
thing,
Okay.
you're,
Yeah,
this is
we
our
are-
next quarter.
Yeah, exactly, yeah.
got it. Okay,
So we're in the last quarter of this current fiscal
Correct.
year
right.
as of April 1. Do you want to look at the details on here?
Well,
What-
I think that's
which-
it.
I think if they've
What the
done
funds
so
are.
well, I don't, I think we were certainly not ever gonna micromanage them, and I don't think there's really.
It's a
you know,
rough time. Yeah, no,
and
I-
if they could weather that well in the last 90 days, we
Mhm.
gotta give them, we, first of all, as a town, we're very lucky to be this far ahead. To begin with,
Yeah.
and how it's, how well they've done for us, we haven't really, it's not like we lost millions.
No, no, it is,
And
it's,
so a lot of portfolios are down as much as 30%, so.
Mhm.
Very, very, very good, I'm very pleased.
okay.
Anybody else? Wendy,
Nope, it looks good to me.
thank you.
Because it pretty much coincides with the dates of this administration,
Exactly, that's why I brought that up.
which has been volatile to say the least.
Well, and ever since the,
I could apply some other adjectives.
Well, yeah, but we're
Thank
being recorded. They'd be out of the ethernet forever, JB.
yeah, our commerce secretary though, I'm not too pleased with him, let's be honest on that, and, I think the tariff thing, is very difficult, and I think it could be. We could be looking at something that'd be a lot worse.
Well, the uncertainty of it all, I mean, the
Yeah.
tariffs are on one day, then they're off the next, and then they're back higher the next. I mean, so no one, I don't know how you can predict anything in this environment.
Other than to be careful how you bid your investment.
Yeah,
And ride it out.
Don't panic. Yeah,
Yeah, well, the equities were only a certain part, and then I see the interest rates are going back up again.
yeah, because there's, never mind.
Yeah.
It's got, no, it's,
Selling bonds.
which is not the greatest thing.
No.
And that's what caused the panics, early last week.
The ghosts of Smoot and Holly have risen from the grave, right? So.
But something to keep an eye on here is that, so if we're going to the portfolio summary, so over the activity summary, when we have the ending, okay, so we did the. Actually, no, it's better than I thought. Never mind.
Okay,
Scratch that. It's better
so,
than I thought.
so the cash is that an investment, or is that just money that that you might need, between now and whenever?
That's another good question. I believe that is liquid. I think we can get access to that immediately.
I believe you're correct
Yeah.
from past conversation.
Yeah, I think we do, because we have that in our investment policy, that we do have that requirement to have at least 500,000 of cash, and I believe that this is still the result of the large deposit that we made in September for investments to the CIP. I think they're probably still working with that number and distributing it most appropriately.
And that
Yes.
may, some of that makes a little bit of money or doesn't make any money, some of that cash.
I
I would.
think it
No, we
would.
did, we actually did well on our cash well, on our money you know, that's over at the.
At the first,
This is the
or-
first at
this is
Barber
what-
Bank and Trust. On our money market account, that's what you're doing with all your sweeps. We're
Well,
making,
that's, yeah,
we're doing really well on that, I think we're like just under 5%,
Wow,
which is
Mhm.
quite.
oh, we've decreased.
We've decreased, but we were,
significantly since October.
yeah, but we've done well.
Yes, we are on track to meet budgeted expectations for interest income in fiscal year 25, despite the cuts. Um. Yeah, well, we have more things on the agenda regarding this portfolio that we can circle back and talk about the activity in more detail. But that's a good overview. If you guys have any questions, I'm gonna make sure I ask Matt how exactly the blended benchmark is calculated. And then how much, if the cash and equivalents actually has any return.
right, because
Is
that's
that-
a lot of money.
That is a lot. Yeah, I would think, I mean, it would wouldn't make any sense to have it in an investment portfolio not making anything.
They always have some form from, you know, from its past experience.
There's gotta be, I can say, I'm certain that we are making something. I don't believe this is a savings account situation with our cash and equivalents. But
Good.
I will circle back. I'll follow up on that. I don't wanna say anything wrong, but I would be shocked.
Yeah.
We
Good.
don't have anything that's not earning
Right.
I
anything.
believe it's not a parking lot.
No, it's not. It's not. We don't have anything that's just hanging out in a savings account. So,
But we can get the actual, what it's paid, if you'd like to find that out. That's easy, that's an easy.
oh yeah,
Straight up easy question to get from him.
we can get that right. We'll get that right.
Easy.
Easy peasy. Alrighty. Okay, so now we can move to our internal reporting. So
So that we hand off to you.
this is me. Okay, so this first report here, and let me know if you want me to.
I'm gonna be back in 90 seconds. I cannot read that.
What about
No,
you?
I'll
What
be
about
back. You guys keep going.
the? Okay, yeah, that's not gonna do it. Like to remove that toolbar, but it's not letting me, so. Okay, so right, so this is cash and cash equivalents right here. This is what the 6.4 million as of 3/31. That was how much we had across all of our cash accounts. So that's our operating account, our operating ICS reserve. Well, we have an account for wire transfers that I keep empty to make sure that there's no fraudulent activity. If people want to pay via wire,
Got it.
like pay taxes or pay their marina fees because they don't want to send a check, I do that, but I don't want them getting it sent to the operating account just because giving out that routing number is not something that is the best idea.
That's good.
We earn a very minimal amount on our elementary school bank account because we spend their balance is pretty minimal because we just transfer money when it's needed. So there isn't a lot of gain from that account.
So are the schools all on this in here too?
Yes,
Oh.
yes, well, the school. We don't have access to their books. They're not in our accounting system, but we transfer money to fund their activities.
Oh, okay.
And that comes from we transfer from our operating account into their bank account. Which we're the signer on. And then in our account at First National Bank, not wealth management, we have $1.4 million. That is liquid in cash. If we need if we have any cash flow issues, we can pull from there as well as the reserve. Then we have an account specifically for the ARPA funds that we received a few years ago. We are still in the process of doing a Spectrum broadband project with those funds that we got. We went in with Hancock County. They gave us some funds to add to the pot, and we have had one expenditure, which is this $135,000 and this is our remaining. It's 158, but that'll finish out the project probably in the next few months, actually. And I have to obligate those funds by the end of this month, so we don't lose that money. So look at that. You didn't miss. I was just, I'm still on cash. This is just the balance that we
Yeah,
have
but
on
now I
cash
can link
accounts.
everything.
ARPA, yep. Then we have the balance of the our bond or capital projects. So I've broken each of the since 2023, the capital projects are broken out by the project, and then we designate the cash amount that we've taken out specifically for each project one by one. So a lot of these, we get the funds from, I mean, most of the, well, over the last few years, all of the general obligation bonds we've taken out have been with Bar Harbor Bank and Trust. So we have a capital projects account where they deposit those funds into, and that has that's in a separate bank account that has a much lower interest rate against it, because we don't want to be out of compliance with arbitrage, which is not making more money or more interest income than we are paying on our loans. So we miss out on, some interest by having.
That's part of our tax exempt rules. You can't do
Because
that.
they're tax exempt, yes, and muni bonds, I don't know if you saw that. If the feds have identified another ways that they can save money, which is getting rid of tax exempt municipal bonds,
Which is bad.
which is bad.
Also,
Very
Um,
bad.
that that would increase project costs by at least 25 to 50%.
yeah.
That's
That's
a
like
big deal.
double. That's like,
terrific number.
It's a,
Yeah.
it's a big, I don't, we can.
Doesn't make any
And-
sense.
Go back.
Better get on the horn. Shelley and Jared.
Yes, absolutely. Get this.
So this is the balance that we
And
have in capital projects right now, and I transfer those funds to our operating account as we do the expenditures out of the general fund. That makes, so that way we're not getting that interest.
This is a really dumb question.
No such
but
there's
thing.
no dumb
No
questions
such
here.
thing.
This might be, I just am still confused
Okay.
about the way you use pluses and minuses.
Oh, yes, okay,
So the minuses are, you add the minuses and you subtract the pluses and.
okay, so.
Yeah.
So it depends, and this is why accounting is such a great thing, because pluses and minuses mean different when you have debits and credits, or if it's a balance sheet account versus a revenue or expenditure account. These are balance sheet accounts, so the positive numbers you see here are actually positive, whereas this negative number you see at the general fund, that's the combination between our ICS reserve, which goes transfers back and forth. So sometimes the operating will have a negative balance because it has the funds swept over into the reserve account. So in this case, what you see with these, or lack thereof of minuses, is actual straight positive activity. But when we get to the expenditure accounts and income statement account, those will have negatives because those have a different normal balance in the general ledger.
I'll just continue to do it backwards the way. I've been
Okay,
doing it
okay.
all
It is.
It
It
is,
is.
it is
It is.
confusing. And I haven't really found a good way to describe it, in standard terms, honestly. I'm working on it. I'll let
Okay.
you know when I can wrap my head around that. Right now, I just
But
thinking of income
but more
statements.
importantly, the money comes in, the money has to go out, and there's always gonna be a net balance, so that's what can be confusing for a lot of us.
That
Yes.
part I get.
I will, when we go further down, I'll point some things out. And I'll think about ways that I can describe that better. The good news is for these first few accounts, the ending balance is actually going to be positive, so it's
Good.
Yeah, we can digest that easier. Okay, so then this, I love these reports. Can you see on here? Okay. So this right here is the internal version of what we just looked at the First National Wealth Management. These numbers right here are what should match those statements. And also where we are tracking our reserves in an Excel spreadsheet that I will show you. That is a beast.
And the numbers are the same.
Yes, that 13,257.
Exactly.
That was on there. Yep. So it balances. That's a good start. So,
Excuse me.
so this, let's see, so we're in the 100 fund right here. This is the, show you, actually this, I think, well, I don't know if this actually will be easier to see because it might be, there's a lot more numbers here, but, that 2.1 million, that's our general fund investments. So those are the reserves that are, undesignated. We don't have any particular usage for them right now. And then we have the general fund reserve investments. Those are the CIP funds that we have for our department's respective projects and equipment. And then the marina, which has to be it's its own fund, but this is also included in the reserves. So the total reserves that are attributable to the CIP is about 84%. You asked about that last time, Jamie. Yeah.
Okay.
So the total amount of the reserves or our investment portfolio that is specifically earmarked for fire trucks, station wagons. No, not those. We don't buy those. Cruisers, all those.
Police cruisers.
Yes, thank you. That's 84% of our entire reserve portfolio.
So theoretically, all of that money will get replenished, but it will
Yes.
all get spent.
Yes, and then added as assets. Yeah, it's kind of just a
Right.
Money in, money
revolving
out.
door. Yeah. And then like I said, there's.
Well, it's been also itemized and pledged. That's what, I think is the really important take home of this, that everything is tagged and going to specific places due to the CIP, both CIPs.
I think that's a great improvement.
It
So,
is huge. You can follow things and know where it came from.
so the marina, do we have, we just get that as a warrant committee for information, or?
Correct.
Do you, that gets invested with our folks of wherever,
Yes,
and who do we say that's a good job or a bad job, or is that up to the harbor committee to say that?
oh, okay,
That's an interesting
that's a
question,
very interesting
but
question.
the answer is no.
It's, I don't believe the harbor committee
It has
has,
zero voice. They
it's-
could ask to spend the money, but they can't.
Correct, but-
They're similar to, they're an advisor, they're like the sustainability committee, they're just an advisory group. The only one other than us as the investment committee or the board of selectmen could make any, changes to the investment of that.
exactly, yeah, and when the CIP was enacted, I mean, it had to go to town meeting and.
Correct.
The initial allocations were approved at town meeting. And the scope in which those funds could be applied were also agreed upon at town meeting. The select board is authorized to approve expenditures from those reserves based on the outline that was provided at the town meeting.
Marina goes through the same process as any department head.
It's the exact same
They
thing.
request the taking of so much money for this particular project, and then they tell what the balance will be. So they do not get to operate on their own.
And who measures the board of selectmen's?
Yes.
Correct, so at the end of every board of selectmen meeting, Wendy could testify, is they do what's called treasurer warrants, and those are those transactions and how those take place. Correct?
Are you talking about the new business with because we have the new business is the actual agenda items that request the authorization to use those funds. The treasurer's warrant is just a summary of what.
Where?
Of the accounts payable for just the vendors, it's who we paid and how much. But that's included in the approval of the treasurer's warrant. But it's something to note that the new business where the agenda items are listing requests for authorization, that does not necessarily reflect the activity in the treasurer's report. Because they will make, those are encumbrance that they are requesting in advance.
They'll show up later.
And so the accounts payable
So they
process,
they're lagged.
they won't necessarily, you're not, there are some times where you will see a request to use those funds at the same meeting where we are going to be paying an invoice. That's not exactly best practice, but in a we can't release the funds until we have authorization, so it is within our purchasing policy and within the right, it's just, it's, like I said, not best
So
practice, so
just,
it's
they
an
wanna buy
encumbrance.
a brand new John Deere tractor out of the Marina Reserve funds, they would get the selectmen approval, and then it would show up in the treasurer's warrants, either the following or
Yes.
the next following meeting.
There usually is some
A lag.
foresight, and
Could be at
so
the same meeting. That's what you just
yes,
said.
and it has, that does occur. Mhm.
If there's some urgency.
It's putting the pressure on.
When there is an emergency, yeah, when they discover that they need to spend something right now, and then the vendor needs the check immediately, and I'm like, okay, well, they're gonna have to wait till this meeting. And you can ask you can ask for authorization at this meeting, but we cannot send the check out until the board authorizes it. But I just wanted to clarify that what you see in the treasurer's warrant does not necessarily match what you see under the agenda items that are listing reserve authorization activity.
Thank you for that explanation.
Yes, absolutely, my pleasure. Okay, so, right, so that's just, that was just some detail there.
Are we going too fast, Wendy?
Oh, I'm with you.
Okay, any questions?
No. No, I
Thank
looked
you.
it all over really well, so it pretty much makes sense.
That is the goal. And then this is our, another form of showing the reserve balances for each of our, equipment reserves. So we've broken down, each of these, so we have, Public Works Building Reserve, Public Works Equipment, we each departments have their own reserves for specific use.
So
And
as you can see, like about 3/4 of the way down, Jamie, you can see the the equipment engine reserve for the fire company, and see that high, that how high the amount is there.
Yeah, but what I also see, but May has tried to explain it to me, but I can't.
oh,
It's all
okay,
those minuses.
here we go,
And
okay,
they
okay,
get
okay,
added to the,
okay.
they get added.
Yes, so this, okay. And this is interesting, the initial setup of the CIPs had them added as liabilities.
Got it, okay.
And so that's why you can see this negative end balance, because it's a different,
Right,
account.
got it,
And
I think.
the credit balance will,
It's the new math.
it's exactly, yes. So in this case, and I mean, there's so many different ways to set this sort of process up. You don't have to have them as liabilities, but that is what the town did when they first started the CIP. So the reserves are displayed as liabilities, and this is the negative balance of their reserve, because in assets it was positive and this liability it's negative. It's
Got it.
so
Thank
this
you.
is yeah, so I will continue to think of ways to explain that. There's got to be a way. I'm gonna find one. I'm gonna find a really good one.
You got it.
So right, so this is just, these are the balances. So when for the most part, when department heads want to know the balances of their reserves, they can go into Munis and find them. At the same time, though, Munis does not account for the encumbrance. So when they request authorization to purchase a vehicle 6 months down the road, we can see the fire equipment engine reserve, they have a encumbrance for almost $1 million that they haven't purchased a new fire truck
So
yet.
that is money that's not just on paper, that's actually real money.
That is money that is in our investment portfolio that I would have to reach out to Matt Weaver for him to liquidate.
And so do they, so if they buy something, do they just buy it or do they buy it on?
Great question. Okay, so all expenditures for the reserves and everything come out directly from our operating account. So our general fund, everything is paid out of there. It's where accounts payable is. At the end of the year, I'd say for cash flow purposes, best practice to make a transfer from between funds. So it'd be a due to the general fund entry, where we would take the audited balance of what has been due to the general fund, as in everything that's been paid out of the general fund on behalf of the reserves. That's a balance by the end of the fiscal year. Just, you know, a list of everything that we paid, that's what's owed. That's what I would request Matt to release, and I would give him enough time so he can move things around.
Right.
And I didn't do it last year because I thought I just kind of want to see what could be done if we kept that in our in the reserves to build them more. But this year, not because of a cash flow, but just because I think it's also a good idea to do a transfer to the general fund, specifically because of the market that we're in. I'd like to take some of those funds out. But the encumberment that we have on this fire equipment reserve is, like I said, I think it's 963,000. That brings our balance down to, you know, 1 million something. 1.6 million, 1.5, around there. So it's not everything is what you see this,
Mhm.
you have to track it through the spreadsheet in order to determine what the actual available balance is. And yes, that is available funds that we have to pay out of our operating account. But does not belong. It does not come from the operating, you know, I have to
Yeah.
transfer, it has to, there's a way they get in there. Anything? See, okay, those are total reserves. Then we have a couple trust funds, Stanley Reynolds scholarships that we give to MDI high school students, graduating seniors. It's the
Which is coming right up.
correct, yeah, it's the each of the trusts has a covenant about what exactly can be done with the income in addition to the principal. So the covenants say the principal must remain the same, but any income earned in that year can be used for the purposes that they line out in the initial endowment. So I mean, it's small amounts. These endowments are from the 50s, 60s. And this is at Bar Harbor Wealth Management. And we actually, this last quarter was actually good. As you can see, we had an increase of $620.
But so there's no incentive to grow that because
Because of the restrictions on the initial
the
endowment.
restriction,
Mhm.
yeah.
And these are gifts were given back in the 60s when, you know,
Been a lot more.
completely different, yes,
Yeah.
exactly, completely different
Okay.
circumstance. And the requirements, you know, $100 can go towards the scholarship, you know, that back in the 60s, that was
Yeah.
That was a lot of
good
money.
amount of money for a scholarship. It's very interesting. But because of the restrictions that we have on them, yeah, we actually, like I said, had a good quarter, and we had earnings of $620 in our trust funds this year, or this quarter. Last quarter, we had a loss, so that was good. And then this is another example of different financial statement accounts having different balances. These are revenue accounts right here, so they'll show a credit balance, which is this negative amount.
Of course.
Of course,
Just because-
naturally, as in negative. So as you can see, so the total of what was budgeted for investment and interest income in 25 was this 410. And we are almost there at 92% as of the third quarter of fiscal year 25. So we should be able to be on track to get that 410. It won't be as good as last year. Last year we were over by over 180,000 of our budgeted revenue. So interest rates increased substantially.
Now, do these guys try and forecast interest rates or not? I mean,
I mean, he talks a lot about
They just
potential
do.
upcoming cuts. So, yeah, I think they do.
They try to be in front of market trends.
Yes, he says proactive a lot. And then you can
That's
see here. We have the account that houses all of our bond funds, you know, it has $6 million, but this is how much interest that we have gotten, in the last, 3 quarters because of our, restrictions on interest income on tax exempt bonds. And this actually, that just gives you a total right there. We're super close, 97. Okay,
You know, one of the things that I'll remind Jamie that comes up in the warrant committee where people don't understand county practices, why do we bond things? And we explained that
Yeah.
we should never be on the hook for money. We shouldn't put out money in advance that we don't need.
yes, yes, and also another thing about, right, for the potential to decrease taxes doing it that way, because taking it on, the brunt of it would be a huge increase to residents. And then the other thing is that I think when it comes to either, you know, using reserves or pulling from something that isn't a bond, like easily, or not, but readily accessible funds like a bond, the people that are paying for the bond won't see the benefit of, people that are, if you do not bond and you go ahead and do those projects like out of a reserve or out of an undesignated fund balance, the reserves that are going on, those are in the future. So a lot of the times that the expenditures and the tax increase that are affecting the residents, they're not going to see the benefit of those projects in their lifetime. I mean, potentially. So when you take out a bond, it's the most immediate way for residents to be able to see the effect, the positive effect of their tax dollars. That's why, I mean, that's another reason why bonding is, it's about, I mean, you get the money as soon as possible. You don't have to wait,
And you get and you pay as you go
pay as you go. So
versus crushing all your reserves.
crushing your reserves.
So having the money invested versus, I think you understand that how that works, but to people that don't understand, accounting practices and how municipalities do their accounting practices. Well, why we have the money, why don't we just spend it, why do we,
Yes,
and I've heard that at our meetings and I said, well, it just doesn't work that way.
Yeah.
And I think your explanation is really good.
I'm working on it.
On top, over time, no, but over time and the immediate what you're spending today
Right.
over 20 years, those the little bit of interest that you're paying each year versus zeroing out your reserve account. It's much, and you never know what what you might need in those reserve accounts.
Waiting to rebuild it.
What's gonna happen in 10, 12 years?
Yeah.
Could be a lot different.
well, that's why it's a concern that people who think that way would see that we had all this money, would say, well, why don't you give it to us?
Right.
Well, I think,
Right,
I
yeah.
think the Robin Hood effect comes in,
Because I mean, the other way to do it is if, we don't have these growing investments, then we're gonna have to,
Raise taxes.
yeah.
That's the.
Yeah, 'cause
exactly.
otherwise we can't just go out and purchase a $1 million fire truck, because we'd have to raise taxes that year just to do that
So is what, what.
significantly.
As,
Yeah.
well, the whole idea, the CIP, as we're nearing your end of your tenure, Darrell, and one of the things that you really helped the town with is our chance to say that was creating the CIP, which takes all the spikes away. And then we don't have all these individual reserve accounts that we were picking money away from as we went. Now we have a forecast and a plan. And now that our CIP is fully funded,
Yeah, you're there.
it took what, 3 to 5 years
Yeah,
to
yeah.
complete it roughly?
Yeah, I did.
So I think the town thanks you for that. It's our chance to, say some nice things to you along the way. And I think that, in the next 20 years, I think this will really be a great benefit to the town, so we can predict and have some way to navigate the future. And things are, unfortunately, things just continue to cost more.
Yeah, it's just inevitable.
And when we have things like schools and buildings to take care of, and I don't think the price of fire trucks are gonna go down any day soon.
No, no, it does not bode well. So this next item, number 5, this is, very much, discussion in advance because we can't do anything about it yet. But I looked in prior years and the investment committee was involved in the decision to pull from the capital gains reserve. So I wanted to bring it up at this meeting because our next one wouldn't be until July and we would already have done the assessment by then. And then this wouldn't even matter. So it's on the warrant for the town meeting in a couple weeks. It's a discretionary spending article. We had one 2 years ago. Where if the market conditions are conducive with this, to potentially take funds from the capital gains reserve, which is included in our reserves, but it's outside of the equipment reserves. And potentially taking an amount based on the market to lower the assessment for the 26 commitment. So
that wouldn't be a cash transaction, that would just be lowering taxes. You wouldn't be paying me.
No
No.
rebate this year.
You'd be paying us less.
You'd
that's
be
all.
paying us less.
Right, and all you're
No
doing-
checks will be cut to Jamie, no.
Yeah.
Yeah, it would potentially lower the amount that we
So
are.
basically, it lowers
committing.
your tax liability as a citizen, as
And
a
is that a
homeowner.
significant?
So the discretionary spending article, I have up to 200,000, so we can do anywhere between 0 and 200,000.
It's just about a nickel on your
The
tax.
town
Yeah.
has to approve this. But it's pretty standard to 250, 200 based on the market. I said probably up to 200 because you don't want to do more than that specifically in this market. Because the capital gains reserve, and I can show you, takes the brunt of market volatility. And that was set up and allocated that way to protect the equipment reserves from losing any of their principal. So if the market crashes, all of the activity or all of the loss would hit the capital gains reserve.
You just answered one of my questions.
Good, that's great.
I haven't even asked.
Efficient. So as you can see right here, so in the quarter, this is the loss that we had. In the investments, the change in market value was almost $200,000 negative. So obviously the sales and purchases that net out, but the $200,000 difference here, like I said, comes directly out of the capital gains, and I'll show you the capital gains down here. So it is included in our reserve when it comes to the list of assets and equipment and stuff like that. It's just, this is specifically earmarked for changes in the market. So if we have a really good quarter, then the capital gains reserve is going to be fantastic. And then if we have a really bad one, then it's gonna, wipe it pretty much. So basically if there's, so this difference right here, this is gonna be the purchases that we need. Like this. Okay, 100. You see, it's an Excel formula. So this right here, this plus this, right? So it's the loss in market value, right? And then the net cash sales, I believe those are, what's that? Yeah, net cash sales purchases. So, like the decrease in because we purchased, it's the activity. Basically, it's what they made purchases of stocks, bonds, all of that. So that loss in the overall market value is this 246,000. So that means in this sense that because that loss is coming directly from the capital gains reserve, the impact that it has is going to be much greater on the reserve balance
Balance.
than the rest of, so if we have like, if we have a decrease of 1% in the entire portfolio, the capital gains reserve would be 12, like down 12%. Just it's because we're talking the smaller, it's a smaller allocation, bigger allocation to this smaller amount. It's more effective. So that's something to consider, that if the market falls and we want to pull from the reserve, it's not a good idea. And that's why I didn't do it last year, because it was so volatile last year as well.
So it's an available tool that she doesn't have to use.
Yes,
So
Yeah.
that's more
Discretionary, that's why it's
aggressively
discretionary.
invested, I assume.
yes.
Good.
Well, actually, this is okay. So I'm so sorry. The first doesn't, they don't know exactly how we do our internal allocations and breakdowns. So that reserve isn't invested, the capital gains reserve isn't invested any differently than all of the other assets in our portfolio. It's just the way that we internally allocate it.
Oh, okay.
So for us, we are internally allocating it to a higher percentage of the market activity.
Got it.
And that's, you can see right here, that's just how, here's our negative activity right here. And the general fund investments, and then the general reserve, the capital gains reserve, like I said, is included in this, the general fund reserves, including all of those assets. So it's included, but it's its own reserve. And that is assigned the highest allocation when it comes to market volatility and the effects of them. So it's, like I said, invested the same amount or same way that everyone else is, all the other ones are. But so 2 years ago, the town pulled $100,000 from the capital gains reserve. There's a discretionary spending article that had up to 250. And then in June, right around the time it was going to be for the commitment, the investment committee recommended 100,000. And that was what was done.
So if your tax rate is based on your value of your property,
Correct.
the big houses are the ones that get the benefit from that 100,000, right?
Well, it would just affect the mill rate. So if the mill rate,
So it'd be
everyone would
everyone.
have effect. I mean, it's,
We're all out of the same pot in the end.
of course, like the more money you pay, the more it's gonna
The more
decrease.
you're gonna get back, yeah.
But at the same time, if you're paying less, then
You
you
get
still
the-
pay less.
But it's all per, the bill rate's all based still on per thousand.
I just,
And equity.
I don't know, this is just a theoretical
Sure.
question, which is it worth? Is the reason for doing this to kind of say, we're doing a nice thing for you, even though it's really pennies that could be better saved and invested by the town?
It is an excellent question, and I cannot answer that.
No, that's for the.
Yeah,
select board.
exactly. That's exactly, I think my way that I think of it is I'd say similar in that we have all this money, we have, potentially an opportunity to lower taxes, so it's sort of it's a goodwill
Right.
intent. But $100,000 is not gonna do a lot.
But it costs, the households that we have, it's not a lot of money in the end. Like you said, that's.
Right,
That would be 100,000, would be like 2.5 cents.
yeah,
Yeah, but then,
Right.
I'm glad to get it, but I wonder if it's not better being invested.
sure,
I mean,
and that's why
but
that's
I can
exactly why
invest
we're
my
here.
2.5 cents. but-
Yeah.
You could, I have some ideas. So yeah, that's really up to the residents.
But it's an available tool if we needed it,
Sure,
or if we had spikes some year.
No, I'm not opposed to it. I just,
It's a
It's
very, very
confusing,
good
listen,
question.
it's very esoteric and confusing. But at the same time, there's a lot of clarity in it, because there's only, it's only one thing you can do with it.
Yeah.
And the idea of capital gains to a regular investor, you have to pay tax on it, we don't.
Correct. Not a cent for now.
For now, today, let's hope that doesn't happen. It would really, I think it put a lot of small towns in Maine
Oh my
in
God.
trouble.
Yeah, we would be fine. I can't even.
I mean, we can, from what we have in front of us, Wendy, we can weather things that a lot of small towns in Maine can probably nod if they start taking that away.
The tax exempt.
100%. And I think, I think some people, when they see that figure, that reducing the tax rate, even though it is minuscule, I think that it makes, I don't know, I think it makes some people feel like they're getting a teeny bit of something.
Yeah.
Yeah.
Yeah, and that's the whole point.
I
Yeah.
think, yeah.
The theory behind of it is to address the fact that you have overtaxed the people the year before.
Exactly.
So you give it back the next year, but you took too much from you last year.
That's the undesignated fund balance. That's
Well, yeah, yeah,
different.
Right.
but I mean, it's the same
But I
thing.
wouldn't put it that way.
What's that?
I wouldn't
Yeah,
put it that way.
absolutely not.
That would have been overtaxing you. so
Well, but
Here's
the
2
problem,
cents.
the problem is that when the budgets are done 18 months in advance.
You don't know how it's gonna be.
You don't, it's a gamble.
Yeah.
But you have to gamble because you wanna take a little bit too much more than too much less,
Right.
right?
No,
Then
I
that's
think
when you get
I
in
think it's a
trouble.
fine idea.
Because we don't wanna be in a situation where like we have a department head has to come to the board of selectmen and say, well, listen, we budgeted this and we're we're over budget and now we need to ask.
Which
for
we have had to
And we've
do.
had to
We're gonna do that.
several times, especially like on the recycling program, that was like a perfect example.
When we got hit with the 8% CPI increase, I mean, our budget was totally out of whack because we had anticipated, 2 to 3%, which had been, the standard, and that's usually 2 to 3% is the standard over a decade. But all of a sudden, in that decade, you get one that hits 8, and oh my God, and the year before it was 1. So.
I
it's
would like
crazy
to
stuff.
note, though, that when it comes to pulling from the undesignated fund balance, there is the concept that, it's because we overtaxed you the year before with the capital gains reserve. It's not that same
Right, right,
situation.
I know.
Because it's an extra benefit that we can use to benefit
Yeah.
our
I like the
constituents.
message
So
of it.
I think it has a more positive message.
Yeah.
That we have this opportunity to lower taxes as opposed to going backwards and say, just kidding, we got too much from you. This is a different,
Yeah,
Exactly.
yeah.
it's good, but at the same time, it's very, very, very hard to tell.
And many towns don't have that opportunity to pull from the UDF.
No, because they
really don't.
utilize every single dollar.
Yeah.
They're in the red all the time. We're not, we're still very blessed, and the 5 of us should pinch ourselves. And I want to thank, our both our town manager and our finance director for doing the good job. With that said, before we get to other business and if we had our audit, and when does the audit take place?
No, no one's got it yet. None of our towns have got them.
No one's
They're
got.
still on the school. We
I-
went, last year was like a day or 2 before town meeting.
Right.
We had the meeting May 1st. When they presented it, our meeting was May 7th.
It'll probably be similar again this year, I'm guessing.
I reached out to them today. I'm waiting to hear back about availability to present in the next couple weeks. But as of today, I do not have it. And
But they have the books, they have the numbers.
they have everything that they need.
Right.
I specified, I said, is there anything I can get for you?
So we just have to kind of,
So we're just, it's the waiting game.
yeah,
like everybody.
everyone's in the waiting game.
Mhm. I specified that I didn't want to have to reschedule our town meeting. So I think they know the urgency. But she said there's other towns and schools waiting on theirs as well, so. I mean, I think that is the reality of the situation going forward, especially since the amount of auditors in Maine are decreasing rapidly.
So our town meeting's May 6th.
Yeah.
It's gonna be I have a busy week.
Yeah, it's gonna be great.
And Jesse graduates on that Saturday, so, and I get to travel again. Okay, keep going, so we're close, so I
Yes,
did,
we're
I
almost
took,
done.
well, no, I took the calendar out too, because that's our next agenda item. Are
Yes,
there
it
more
is.
questions? Do we have more to
So-
follow here? I mean, are we all, before we move on, are we all comfortable with item 5 and understand how the capital reserve article is? Which there was no pushback in the warrant committee or questions. It's just a standard thing that happens.
Very standard, yeah.
No,
But
that
does
makes,
anyone have a? Sorry, Wendy, go ahead.
no, that makes sense to me.
Okay. Is there an amount that you recommend, that you want to recommend to go forward, or do you want to have an emergency meeting in June to discuss a poll? Before it's done, an exact amount, or
Oh, for 5, so.
for 5?
I like how you have it listed, not to, if you do, like as you said, not to exceed 200,000,
Yeah,
right? Because that number does not go to town meeting, it's just the article that we're
Correct.
taking the money.
we could take $5.
We could take $5. What, as the finance director, this is where you get to put that hat on. Do you think 200,000 is enough or too little? I love the words not to exceed, because that gives us a lot of wiggle room.
I think that's
Or do-
those are smart words to use.
Which we do on, most of our
Yeah.
requests.
Yeah.
Anytime.
Our lawyers are. Oh.
Well, we're all lawyer trained, unfortunately.
Correct.
Ask the planning board.
Amazing.
It is amazing.
Yeah,
I mean, I can't dictate this, do we should put a dollar figure today while it's the 5 of us, or we can just leave it open? We don't wanna have an emergency meeting, I'm with you.
Okay.
I think, so we should come up with something today, and just because we pick a number, we don't have to use it, correct?
Sure.
So I propose that we use 200,000, not to exceed 200,000 in our discretionary spending article.
I would
Okay.
second that. Oh,
You
I
would
can't
second.
vote. Never mind. I can't vote, right?
Also,
Jamie can.
it seems
You
sufficient.
can vote. When you can vote? When you can vote? No?
See, is this like, well, yeah,
No,
I think
yeah,
you
it's-
could, because.
It's me, Zerland, that can.
Yeah, I think you can
You
vote.
can vote.
I think you can vote.
Yes, we have
Okay.
a quorum because of,
Yeah.
because
Right.
of her, yeah.
Okay.
I
Then
would like to know, 2 years ago, it was 100,000.
Ah.
And that's what we did.
Then we'll do 100,000. We don't need to, do you think, there's no reason to double that, right?
I don't
You
think so.
said- You said 200,000 and.
If some miracle occurred in the
Right.
next few months, I said perhaps 200, but mean-
Let's just do 100,000 then.
okay.
So can you do I'll take back, Wendy, I'll redo that from the discussion. I make a motion for the discretionary spending article approved at the 2025 meeting, that the capital, to reduce tax commitment should not exceed $100,000. Right? Problem?
I feel like that's even less pennies. At least if we set up to 200,000 and it became 100,000, it would at least, I don't know, I just feel like it gives a good face look that it's 4 pennies instead of 2 or something like that.
Yeah. No,
Well,
I
the
totally get
last
that.
time we did that, wasn't it left, I mean, when the warrant article says up to 200,000. Didn't Jake finally, wasn't he the one that made the final call on that
I
based
can ask,
on
I
the?
can answer the question. Okay, so 2 years ago, the discretionary article that was presented was for up to, not to exceed, $250,000.
Right,
Then at the investment committee meeting before the town, actually, it was in June, so after the article had actually been approved
That
up
was
to.
formed.
Then Wendy suggested, according to the minutes, $100,000 to be utilized at that time.
Based
basically,
on
And I
because
what
think
this
the
that
was-
was based on recommendations that, for real numbers that we kind of had.
Yes, because this was actually in June and it was an appropriate time to actually make that decision. So you were totally right about that amount. Because it was closer to the actual time where you'd be doing
And
that.
I like that.
Mhm.
If we were to say up to 200,000 and then in that June meeting, it can be changed, obviously, because we're saying up.
Mhm.
If you don't have 200,000, you can't do it.
No, I
So
mean,
then you actually have real dollars to think.
I think it's all sufficiently vague. I will second whatever the number is.
Yeah.
I mean, 200,000.
We'll just stick to the 200.
let's stick 200.
200 safe, right, Wendy?
Yep, I agree. I think that it just gives us a smidgy of wiggle room.
Sounds good. I'll just put it in the minutes that we had 200,000.
To not exceed.
Yeah, yeah.
Right.
Just to replicate the warrant article,
Perfect.
essentially. Cool.
It's a good plan.
Anyhow, I think it's good. It's really healthy to discuss stuff like that.
Yeah, that is
No,
good.
I think it's awesome to hear.
That was I agree with Wendy with the with that take about how it's, even though it's a couple pennies, I do think it has a better better look.
And it'd be hard to calculate from your own tax bill exactly
Mhm.
what the number was that the select board.
I feel like it feels good when I think my tax bill was reduced because we had a little extra money and it, you know.
Absolutely, and the most amount, and doing the most amount possible, yeah, I guess it's the, I
Yeah.
think there's a good optic and goodwill, basically, I think it
Yeah,
shows
I
that.
agree. And that's a great way to put it. It's just a goodwill commitment.
Yeah, yeah.
And
Okay.
you
Let's
think
get-
the next meeting, I have to run it, get a dog at daycare, so
Oh,
Good.
yay,
July,
yep. July.
Okay, so I am not available. I'm only available between the 2nd and the 18th this year and during July. So I propose, how about the 11th, does Friday, the 11th of July work for people?
No, we won't have our reports for the quarter by then.
So could we go to September then?
So, okay, I think there's a couple options here. We could meet in June prior to the commitment and decide on a number then, so it would be 2 months instead of 3. It would be even better than quarterly, so, and then not meet until September. Or I guess October in that sense, but so, I mean, that's an option, or we could go to August.
All right, so I'm booked from the 21st of June through the 1st of July and I can't schedule anything in that time.
Okay,
could you do like the 12th or 13th of June, Phil? Or is that too early, May?
we don't have our quarterly reports by that time.
Usually, it's the end of or 6:30 and then it takes them 10, 12 days to get
Yeah.
it generated.
I
Right.
didn't get them until Monday this week, and I was out of town at a seminar this week, so I pulled everything together last night. I mean, we could, no, yeah, we wanna have the reports for the quarter, but if we met, if we met in June, we wouldn't have them anyway, because that's in the middle of the quarter.
Right, so the
So-
quarter ends.
So we could meet whenever in June, because the second quarter wouldn't even be complete yet, and we wouldn't have.
So what will we talk about?
We would talk about the discretionary spending article and how much we should pull from capital gains. That would pretty much be the only thing. And then our own internal activity, but I have to have my reports to reconcile. So we could have unreconciled activity, but you know.
So I'm super flexible and after
Yay.
graduation at the high school until school starts. So I'm sorry,
Oh,
I
I
have to go
like
get
that.
this dog or my daughter will disown me.
Sounds good. We can,
Wendy, we'll
we
let
can
you go.
email
We'll-
you when we have a date.
Yeah,
Yeah.
we'll ponder it right now. Thank you so much for
Thank
your
you.
time and
Yep.
your input today.
Thank
Thank
you.
you.
Have a good holiday weekend, please.
Thank you.
Bye-bye.
Happy Easter, bye.
Bye.
Well, she's got the week off. Well, the kids are gone all next week, so Patriots Day is a holiday and then the school vacation week is the rest of the week, so. I think the support staff still goes in.
They do, yeah. So July 25th is off the table?
July or July 25th.
Cause if you want, that was,
I have people coming in the 21st, so it'd have to be I could do the 18th. And I could do the 15th of August. Or we can push it all the way to September 12th.
Which is a Tuesday. I guess we could have. it on
September
Tuesday.
12th?
Oh, I'm on August,
Sorry.
sorry.
So, yeah, so let's see, might get that round of guests leave the 11th, so I'm available the 15th or the 22nd or the 29th. We all really want to get together in the middle of August.
Well, the 29th was a Saturday.
29th of the August is a Friday.
It's a Friday.
When does the quarter end? Let's see, let's go, all right, so let's
June
do
30th.
June 30th, the end of the quarter.
Mm-hmm. And the end of the fiscal year. It might be better to meet in August, honestly, because wrapping up the fiscal year is.
Yeah.
Very involved.
I agree.
Okay, August then.
I could do the 15th, the 22nd, 29th, or the 12th of September.
What about the 29th of August?
Nice hot day, we'll all be in shorts,
Exactly.
sundresses or
Sundress
whatever.
ones, exactly.
How about you? Are you, is that, or do you
I-
prefer to wait till after Labor Day? Cause
I don't plan that far ahead, so it's wide open
Let's-
now, but who knows? I've got
let's
We can mess around.
I've got
I'd like
9
to go
grandchildren and
do the 5th of September.
arriving sometime, I don't know when.
Let's do like the 5th of September,
Well,
because it gets us through the summer. I don't think a week's gonna make a difference.
I might be out of town that weekend.
Yeah, I
Are you
think
got
let's
it the
keep
12th of September?
What about the 29th?
I know I'm gonna be here because I, you don't like the 12th either. You're looking at me funny. I think you're
Well,
not
but
too far.
that
No,
is
but-
too far.
And Wendy will be back in school.
She'll be back at school. Yep. Yep.
School starts that week. I think the kids, so
Or does it start the last week of August?
let's go back to, you're here the 15th? Or is that the week you're away? Back to
For,
August.
we're back in August. I will be here on the 15th.
Let's propose the 15th, because the 22nd is not a good day for me.
Okay, and we'll be discussing Q4 of fiscal year 25.
Correct.
Yep. Yep.
And if we do need to have a quick meeting on item 5. After town meeting. Let us know. We'll work on it.
Okay.
What do you think? Are you good with that? Yeah, I know it's far away. That's why.
It's in
Yeah.
June, end of June.
You could pick any day to be working.
Well,
Now.
I did all my scheduling for all my committees and I have purchased and with great pushback from some committee members that refuse to meet in July and August. Cause people don't turn up, but we're a very small, tight group. Will you still be with us?
The last day.
That'll be your last day?
What,
Oh, the 29th. Yes, sorry. He'll still be with us, yeah.
Well, we'll have a cake.
theoretically,
We'll have a cake, yeah, hopefully.
by that time, you should be. Probably won't need me at that time, because by that time, the new person better be in.
Yeah, so-
Place.
So you like the 29th? We'll do the 29th over the 15th?
You know,
What's
I'd
better for
probably
you?
still be
What-
around.
I have to,
Did you say 29th is probably better for me, yeah.
let's just do the 29th because
Okay.
it's close to Labor Day week. It's
This
the
is the
start of
last
it.
time
The
I'm
start of
reaching for my phone.
All right, so that's the start of Labor Day weekend, everybody, just so you know. That's why-
Oh,
That's not
okay.
gonna-
That's not gonna
That's
work.
why I kept on pushing for the following week.
Well, then what about the 15th? Back
That's
to the
what we,
15th.
that's
That's what we
why
have.
we're having it.
That's why we're gonna, you're here the
It's
15th.
right here on my calendar. the
Okay, well,
15th.
15th it
Perfect.
is.
Well, it's in Jamie's phone, so therefore we can't move it.
I don't know how to change it.
So we'll do the 15th now.
3:30?
Other business, I wanna do some quick other business before we,
Wait, what time? 3:30?
always 3:30.
Okay, last time it was 2.
I gotta leave in 2 minutes.
Better get going.
I don't have. a
I like,
dog.
3:30 is good, cause it just, it allows, it's late enough in the day, you can finish what you're doing, or if I'm on the water. And if I have changes in household guests and things like that, you know, I'm booked as a captain that week, we'll have to defer.
Okay.
But we'll start with the 15th at 3:30.
Sounds good. We can move if needed. Other
The
business?
guests leave the 11th, other business. I'd like to discuss that whatever new town manager that we do hire, that we'd like to have again included in this committee. That's all.
Oh,
And for some reason, they're here like in a training, if they're here and you're still here, I'd like to invite them also to, would everyone be comfortable with that? And would you be comfortable with that? Asking, huh?
Yeah, that day I may or may not be here anyway because of that manager's thing. That's usually that week, so.
Okay,
But,
well, then we'll need the.
still going to workshops?
well, I wanna get my certification, keep my manager certification. Because I might wanna do interim work.
Oh, I got you.
And so that's important to have that.
Barbara Cancer, town manager.
No, I'm not going over there, believe me, not even on an interim basis.
How about Jesse Dunbar? They got rid of him.
I don't think I'll get rid of Jesse.
No, they'll hang on to him.
He's a good guy.
He is a good guy.
Very-
I like
very-
him.
Very capable.
Questions, comments?
I want to say a couple of things. Thank you for all your hard work that you do every day for us. And thank you for your explanations. Jamie, thank you for coming. Wendy, you're not here, but thank you. And
Thank you.
do you have any other questions? You had great questions as we went. Any other comments?
Thank you.
Thank you.
Thank you for being my primer.
This is not easy stuff. This is not looking at a regular investment portfolio.
No.
It's not.
No, this is not easy, not easy at all.
And it's like, looking at market sweeps and things like that, and even a standard portfolio is complicated enough.
Mhm.
I mean, I can get it within about 20 cents. I'm pretty good, it's silly interest rate things. It's like,
know.
it's really hard to, it's like, oh, right.
Yeah,
The IRA got one there.
get you every time. Yeah.
It's not like dollars. Holiday weekend.
Adjourn?
Oh, yeah, and the market was shut today. I commented, I thought that was great to pick a day. That's why Weaver did, he had the day off. That's why he did. So do we want Weaver to come on the 15th of August? That would be the other.
It's a great question.
I'd say yes.
Yep, okay.
How about you? I like to, hey, we pay you guys. He's happy to come.
If you, yeah,
If you can come, absolutely. Yeah.
I would, but my only question that I do have to run would be, since it is so vague as to when we're actually going to be meeting because of schedule changes and stuff. I'd hate to sign them up for the 15th and then have us change it.
Sure.
So as long as he knows that this is,
He has a summer home not too far from in the mid coast that he tends to like to go to on a Friday. So he's come in person and then gone back to the summer home before. We haven't had him in person since COVID.
When it gets closer to the meeting date, I'll reach out to him.
okay.
Probably give him at least a month in advance, maybe 2 weeks.
Oh.
But I.
And how long in advance of that will you have the year-end statements, you think?
We'll probably see those sometime in the first 10 days of July.
Yeah, that
So
should
the-
have,
'cause
yeah,
ours-
I'm just thinking about my reconciliations that go in addition to the statements. I should definitely have them by then.
Okay.
They'll be unaudited, but they will be.
I trust you.
We got this quarter, they had it, we got it last Friday, right?
I got them on Monday
On
of
Monday,
this week.
right, so the 14th, so we'll probably have them this, the 14th of July
Mhm.
roughly.
And then that gives me a month to, it should be okay.
Great. Okay, I need to adjourn this
All right.
meeting.
You're going,
Adjourn.
we're all there, go.
Second,
Second.
second,
Okay.
okay.